Those of you who are trading this pair BTC USD, I want to show you a simple strategy on how to catch this long New York move. So if you are interested, welcome to this channel. Remember, I believe in you. I believe in profits only. Okay, I'm still going to share this strategy, so make sure to stay in the channel, subscribe. Okay, so I believe in you, in profits only, and I believe in simple strategies like the one I want us to look at. So Bitcoin is very simple, traders, like very simple. All you have to do is identify a V, especially right here where the New York session overlaps with the London session. Okay, that's all that you have to do. Maybe one thing, you also need to know the place where that V started from. For example, if let's say price is moving like this and then price is right here, you have to note this as this corner of the V, and then this corner started right here. Okay, it is just the previous turning point that price has made. So right here, it is right at this point where the V started from. So all you do is highlight that area. Of course, you also need to highlight that top corner of the V. Is this a V? It's an upside down V. Okay, but in Forex we call it a V. So you also have to highlight that area right there, so that when price closes below there, you sell. And the last thing that I have to show you, okay, let me just zoom in. It is very important. Okay, you see this breakout right here. What you want to see on a breakout is the second candle closing just below the first candle that broke out. Maybe you would sell right here because that first red candle that broke out, it's not a clear breakout. Okay, so a clear breakout happened right here. You can see that the second red candle is below that first one. Okay, so you take the trade when the second candle closes, and then you hold and make money. Okay, so now that you have the idea, let's just look at a few more examples. We can even start from the beginning. I'm going to be fast. Okay, so all you do right in this region, I'll talk about the indicator later. Let's say price is now right here at this candle, and you can almost tell that it is forming a V because it reversed right here. All you do, you identify where the V started from, and this V started from, it started from there. Okay, it started from that point. So when price closed below somewhere here, you take a sell, you catch that spike. Okay, it's not hard, it's not hard. Okay, let's say price was where, let's say you notice price right there, and you can tell that it has just formed a V up there, and then that V started from this area right here. Okay, so when price closed below, you would have taken a sell trade. Okay, price closed, let's say there, somewhere there, you take a sell trade. It was going to be a long holding, but it did obey. We've checked there. Okay, let's just take quite a lot of trades right here. It was tricky. Okay, let's say price was somewhere there, and then you could almost tell that a V had been formed there. So you identify the point where that V started from, and guess what? You don't have any starting point. Save for that long ranging period key level down there. Okay, so price came down, pulled up, and then guess what? It ended up closing above. So you take a buy trade. What I can say is, once this New York session ends, close your trades, because in between the New York sessions this pair is ranging. Okay, it is ranging. You can check in other areas when you do your own back testing. So you're going to take a buy trade there. This is easy, traders. This is really easy. So what you have right here, okay, you would wait for price to play out. Still you don't have a V until price starts pushing up, and when price was at that point, you could almost tell that this was now a V formation. So you mark the lowest area, you can even mark the wicks, okay, and then you identify the point where this whole V started from. It started from this region where price was ranging. Okay, so when price closed above there, you could have taken a buy trade. Buy trade, price pulled back to this region, you add 2 or 3 more trades, moves in your direction. New York session ends, you close everything, because right here it's going to be ranging. That's trading. That's trading. Okay, let's see what happened right here. Okay, when price was somewhere there, you could almost tell that it was a V formation, and the corner of the V is up there, and that V started, let's do this. Can you see that V started there? Okay, so that is what you would do. Mark that whole area. Price closed below, but guess what? You don't take a trade because these two candles are equal. Okay, can you see that? Those two candles are equal. If that following candle was to close below this first red candle, you would take the sell, but then you don't. You hold, price goes back, ranges, and then you have price closing there in candles following each other. You take a sell trade, you make your money. Okay, catch that long spike. Bitcoin is very easy. Bitcoin is very easy. Let's see right here. Okay, so what do we have? Price. Okay, you have this V, even though it was not so easy to identify, but you do have this V which started up, which started there. Okay, so when price closed above there, you would have taken a buy trade, and then you see price coming back again. Let's say somewhere there, you identify, okay, you identify that upper corner as the area where the V started, as the corner of the V, and that corner started right here. Okay, so you extend this as a key level. Okay, and then price ranges right here. It didn't close. Remember, you have to see candles following each other, which didn't happen. Price ranges until it is outside of New York, so there was no trade. There was no trade. Easy. So right here, the V happened on the London session. I'm sure you would have missed it. Okay, just don't make it a habit trying to identify the V this side. You would make it here, but most of the time you will go wrong. It's more safe to identify the V in this overlapping region. Okay, so don't make your life hard. Right here, price went down, went up. Okay, when price was going up, I'm sure you would identify this lowest point as the corner of the V. Okay, identify there as the corner of the V, and it started up there. Okay, so when price closed below here, I'm sure you would have taken the sell trade, but these were news. Don't take trades immediately after news. If you took the trade, price pulled back to the key level, you add a few more trades, it comes back, okay, goes back, comes back, and then takes you out. This would have been somewhat a poor trade, which is not normal on this thing. Okay, so here let's see what you have. You have your V. Okay, you have your V. This spike was caused by the news. Okay, so seeing price coming up here, you would identify this lowest point as the corner of the V, and that started right here where price is ranging. So when price closed above somewhere there, you would have taken a buy. Price pulls back to the key level, you add a few more trades, and then price goes in your direction. Easy. Okay, I'm thinking of ending it here. I was on the 5 minutes time frame. For this sessions indicator, I do my analysis on TradingView. It's a free account. I'm using a free indicator. It's this one, Sessions by Lux Algo. The settings are very simple. You can use any indicator that can show the sessions, because all you need to know are the beginning and ending of the London and New York session. So right here on the inputs, you have the last 4 boxes unchecked. Okay, and then you click New York, okay, London, and then Tokyo is unchecked, Sydney is unchecked. You press OK. That's it. You have your indicator like that. I wish you the best. Keep practicing so that you are ready for next week. Much love.